This is Matthew Cratter from Bitcoin University, and today I wanted to talk about Bitcoin and when we're finally going to get a bull market, when number go up. This was a question from Captain Warp, when number go up, and it's a reasonable question to ask. But before I answer that, let me just say that I've grown to actually really love this bear market, and I mean that completely unironically. I'm really going to miss it when it's over. I have to say it's my first Bitcoin bear market since I became a serious hodler. It's been incredibly painful, but also bracing, sort of like an ice bath once you get used to it. And there's just this different feel to a bear market than to a bull market. Once you've gotten used to seeing your entire fiat net worth wiped out, on paper at least, these huge fiat drawdowns that we've experienced, I find that there's this place of sort of pure zen and quiet and tranquility where your conviction has been sorely tested, but you didn't sell a single sat, and instead you now own more sats than you did at the peak of the bull market in November of 2021. So that's real conviction, and I know many of you have the same conviction and have experienced the same feeling surrounding the bear market. Now you're actually valuing your wealth in Bitcoin rather than just LARPing, and when you experience a deep bear market, as we all have, this is where conviction is tested and where you can emerge much stronger. Bull markets are for LARPers. Bear markets are for the faithful few. As Shakespeare says, we few, we happy few, we band of brothers, and I would add sisters. And I think all of us will remember this bear market and speak about it often in the distant future, a little bit like St. Crispin's Day and Henry V. And if you haven't lived through this bear market, you won't really know what it was like. Here's what else I've really enjoyed. I've enjoyed watching shipcoiners like Do Kwon and Alex Mashinsky and Zac Prince and Barry Silbert and the Winklevoss twins and BitBoy and Sam Bankman-Fried and Richard Hart and Pomp and all these people who led their followers over a cliff. It's been good seeing them get completely wrecked and to become unmasked for the kind of people that they actually are. The other thing I've really enjoyed about this bear market is lots of deep discussions with all of you, with serious committed Bitcoiners on this channel, without the distractions and noise that comes with the price pumping. The last thing, of course, the greatest thing about bear markets is, of course, the cheap sats. You have all this forced selling, and that leads to Bitcoin being undervalued for months on end and allows us to buy Bitcoin at a discount. So when is Bitcoin's price going to pump? When number go up? There are actually a number of huge catalysts just on the horizon. Number one would be BlackRock and the other spot Bitcoin ETFs, which once approved will lead to hundreds of billions, if not trillions of dollars eventually flowing into Bitcoin. And again, it's important to remind ourselves, BlackRock is not stupid. They're the largest asset manager in the world. They're highly connected and influential. They may be more powerful than the US government in some aspects. They're big, they're evil, and they almost always get what they want. They have something like a 99% ETF approval record, so they would not be wasting their time putting together a Bitcoin spot ETF if they didn't think that it was basically an accomplished thing, a sure thing that was going to happen. They also would not be rolling out a product if they didn't think that there would not be massive demand for it. And so there clearly is massive demand for a product like this. If we follow Eric Balchunas and a couple of other analysts like that, as of August 30th, he was saying that he is upping his odds to 75% chance of probability of approval of a spot Bitcoin ETF this year, 95% by the end of 2024. So this is clearly something that people who follow this very closely think is going to happen in the next 3, 4 to 15 months. We don't know the timing exactly, but I think this is definitely baked into the cake and is a sure thing. If you're finding this video helpful so far, I would just ask you to hit the subscribe button. That really helps out with the algorithm. Hit the like button and also leave a comment, question, suggestion for a future topic. So that'd be the first catalyst, the Bitcoin spot ETFs being approved. And I think people are still really underestimating the power of this and what sort of capital flows it's going to lead to into Bitcoin. The next catalyst is obviously the 2024 halving. This is when the Bitcoin block subsidy gets cut in half. It's going to be cut in half from 6.25 to 3.125 Bitcoin per block. And what this means is the market doesn't need to absorb as many new Bitcoin every day. So instead of 900 new Bitcoin being mined every day, there are only going to be 450, I believe, Bitcoin mined every day. And this is traditionally what has set off the new bull market cycle. It's a little weird now because there's so few Bitcoin being mined every day. You would expect the effect to be less. This is a very controversial issue. But what seems to be happening is that in these cycles, people expect them. And so they happen because people are expecting them. And I would expect something similar to happen with the 2024 halving. If you want to follow the path to that, you can look at Clark Moody's dashboard here, and we have halving versus block time over here. So basically, depending how long the blocks take to come in between now and the halving next year, that will determine the actual date of the halving. So if the block time is closer to 9 minutes, we'll get a halving on April 3rd, 2024. If it's closer to 11 minutes, it'll be May 18th. So somewhere in between here, it looks like a 10-minute, assuming 10-minute block times, April 26, 2024. Obviously, Bitcoin block time moves around depending how much hash rate is available there. Then you have a difficulty adjustment that makes it more or less difficult to mine. But somewhere between April 3rd and May 18th of 2024 is approximately when we will get the halving. And traditionally, this has really set off the new bull market. So that would be the second catalyst. The first catalyst is the spot ETFs coming out. The second catalyst would be the Bitcoin halving, which is upon us. And when you see these things lining up, you wonder who is selling Bitcoin at these levels, especially after such a long bear market and with all of these positive catalysts on the horizon, who is selling? And of course, we don't know, but I believe it's still a very, very good time to be on the other side of that trade. The third catalyst is obviously the Fed and their monetary policy and when they will cry uncle and at least stop raising rates, pause rising interest rates, or they will start to hold interest rates steady, or they will cut them. And then, of course, there's a question of what they'll do to their balance sheet and whether they will continue to shrink it or whether they'll have to turn the money printers back on and continue to buy treasuries. We got a hint over the weekend. This was an article published in the Wall Street Journal by Nick Timiraos. I'm not sure if I'm pronouncing his name correctly, but he's become sort of a mouthpiece, an unofficial mouthpiece of the Fed, and they use him to sort of send out test balloons and to drip their ideas into the market. He's suggesting that the Fed may be done, that they're definitely not going to raise rates in September, and they may, this is the sort of signaling the Fed is giving through the Wall Street Journal. So they may already be done. They've caused so much damage already. Obviously, the whole U.S. banking system was rendered insolvent as of March of this year, of 2023. The other thing that's happening is the U.S. government's finding it very difficult to finance itself at these rates. So just the interest payments on the federal debt are almost at $1 trillion now. And as we get more and more of the debt rolled in the coming 12 months, it's going to be, these interest payments are going to go up because a lot of this debt here was financed over the past 10, 15 years at much lower interest rates, and it will be rolled into new debt that has a much higher interest rate. And this will make the U.S. government have to pay even more money in terms of interest payments. The thing is, austerity is not an option. If you cut government spending, people get very angry at you and they vote you out, and then they vote in someone who will continue the government gravy train. The thing about high interest rates is they destroy government tax revenue in many different ways by reducing capital gains in the stock market and in the housing market. Also, in particular, the housing market, higher interest rates means higher mortgage rates. And this has led to sort of a freezing of the U.S. housing market, at least, where people don't want to move because they've locked in such a nice rate already. And this housing turnover, people buying and selling and remodeling and upgrading, this is a huge driver of the U.S. economy. So high mortgage rates have sort of put a temporary freeze on this as well. And this contributes further to lower tax revenues, as everyone who's in the housing industry, whether it's remodelers, builders, contractors, real estate agents, all are making less money and thus paying lower taxes, fewer taxes. Lower tax revenues with government spending cuts, or I should say without government spending cuts, means that the government needs to issue even more debt to pay its bills. And so you end up with sort of a debt doom cycle here, where tax revenues have fallen so much the government needs to issue even more debt to make up the difference because it's unwilling or unable to cut spending. High interest rates, as we said, make it costly even for the government to roll over existing debt. We can see how much interest rates and interest payments have ballooned over the past 6 months or 12 months. And now we learn, Apollo did a very good study here suggesting that where they went through all the different maturities of government debt and said that 31%, so almost a third of all U.S. government debt, or 7.6 trillion amount of worth of U.S. treasuries, will mature over the next year. And this will not be paid off. U.S. government never pays off its debt. What it does is it issues new debt to pay off the old debt. So this is 7.6 trillion that is going to need to be refinanced at higher interest rates. This will cause government interest payments to skyrocket even more, well above $1 trillion. This was, I think, an interesting chart from the Daily Shot. It was tweeted here by Jesse Felder, pointing out that U.S. government spending as a percentage of GDP is at levels. It's still at levels that we experienced during the great financial crisis of 2008 and 2009. And also it's at the same level that we experienced during World War II. So this gives you an idea where there's a proxy war going on with Russia, there are tensions with China, etc. But the U.S. is not exactly at war, but it's spending money as if it is at war. So something is very, very wrong. This is not a sustainable situation. And the problem is when you look at government expenditures, what are you going to cut? You can't cut defense spending because we're in this military race with China and Russia. I mean, theoretically you could, but it's not going to happen. We have Medicare, we have Medicaid, we have Social Security, we have all the entitlement spending, we have defense spending, and then we have interest on the debt. These are the big sources of government expenditures, and they're not really something that you can get rid of. And then on top of it, we're running these huge deficits set to double. This was a very controversial piece in the Washington Post saying that the budget deficit, which is the difference between the money that's brought in by the government and the money that's spent, is set to double to $2 trillion this year. When you think of U.S. public debt being 33 or 34 trillion, that gives you an idea of how much new debts can be added. Another $2 trillion added on top of that 7 or 8 trillion that needs to be rolled. And what we have here is a very, very serious situation when it comes to the U.S. government financing itself. The Asian countries like Japan and China are pulling back. Russia's no longer buying our debt, obviously. The Saudis aren't buying our debt. And so ultimately there's only one buyer of last resort, and that's the Fed. The Fed can only buy U.S. government debt with newly printed dollars. And so I think this is the third catalyst. The Fed's going to need to turn the money printers back on soon. There's no other way out. As we demonstrate, austerity, cutting government spending does not work. It works in theory, but it never works in practice. So that leaves us with three major catalysts for Bitcoin's fiat price appreciation for a new bull market coming in the next few months. BlackRock Bitcoin spot ETF, the Bitcoin halving, and the Fed turning the money printers back on. I think this combination of catalysts could make for a quite explosive cycle where we certainly see Bitcoin above 100,000, probably much higher than that in this cycle. We could even hit something like $500,000 Bitcoin, which would basically price Bitcoin's market cap equivalent to above ground physical gold. And in this way, it would be one more step towards Bitcoin replacing gold as a store of value. If you enjoyed this video, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.